Hey guys, it is Julie here with TipRanks. Today we're taking a look at two companies that are in the rapidly growing artificial intelligence industry. These two AI stocks have both been rated buys by analysts with some pretty attractive upside. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we're looking at two stocks related to artificial intelligence, which is a rapidly growing niche within the tech industry. Both of these stocks come in with buy ratings from highly rated analysts themselves with some attractive double-digit upside potential. So we're going to take a closer look at what it is that these companies do and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's get right into these two AI-related stocks. Our first company is Talkspace. Trading under the ticker TALK, they're currently priced at $6.09 per share and have about a $900 million market cap. Talkspace brings the telehealth model over to the world of mental and behavioral health. The company offers individual therapy, couples therapy, adolescent therapy, and even psychiatric care and medication management via remote video link. Talkspace users can select from a list of providers, all licensed by the appropriate medical boards. Their total addressable market has unfortunately only grown since the beginning of the pandemic. There is 3 times the prevalence of depression symptoms in the US since the beginning of COVID, and 60% of adults reported that their mental health had gotten worse since the pandemic lockdown. Now, beyond connecting you with a therapist via their technology, Talkspace actually records these therapy sessions. They then use their machine learning and speech analysis algorithms to help analyze the content. The aim is to look for trends in the patient's speech patterns and behavior that may provide a clue to the underlying mental health diagnosis, the proper path for treatment, or even if the patient may become a threat to himself or others. The system banks on the fact that despite the variety of mental health diagnoses, patients frequently show similar use of language during a decompensation event. Talkspace uses AI to pick up on early signs of that to trigger proper intervention. Talkspace came to the public market via a SPAC merger with Hudson Executive Investment Corporation that completed on June 23rd. The deal brought Talkspace approximately $250 million in new capital. Taking a look at their financial snapshot for the end of 2021, they had $125 million in net revenue and about a 64% year-over-year revenue growth. They have over 2 million members served to date with about 3,000 providers. Their business-to-business segment has grown quickly to over 70 different clients with over 40 million commercial covered lives across different plans and employers. Their employee assistant program acts as a catch-all for behavioral health and work-life issues, and some of the employers providing their services include Google, Blackstone, Accenture, and JustWorks. 5-star analyst Stephanie Davis from SBV Leerink covers the Talkspace stock, saying that what we believe elevates Talk above its virtual behavioral health peers is its proprietary AI engine, which enhances both the clinician and user experience via improved engagement, connectivity, and outcomes. We believe the engine's ability to create optimized, scaled, personalized care in the backdrop of broader clinician shortages has larger implications that even democratize access to behavioral health care. Despite our seeing just as much value in the AI engine as we do in the company's core behavioral health platform, the company currently trades at a discount to both, creating a unique buying opportunity. Stephanie is one of 4 analysts that have a current rating on the Talk stock, and all 4 of those ratings come in with a buy. The average price target is $11.33, which would be an upside potential of nearly 84%. So a lot of great upside there. Now, the second AI-related company we're taking a look at is Revolution Acceleration Acquisition, which is a SPAC company that will be merging with Berkshire Grey. The SPAC trades under the ticker RAAC and is currently priced at $8.75 per share. Berkshire Grey is the creator of AI-powered warehouse and stock-picking robot systems. Berkshire uses AI technology to create a class of warehousing robots capable of meeting the crunch of growing labor shortages affecting major companies like Amazon, Walmart, and FedEx. Following the SPAC merger, which is expected to close later this month, they're expecting a $2.2 billion pro forma enterprise value and about $507 million cash on their balance sheet with no debt. They're fully funded to cash flow profitably into 2024. Berkshire calls its automations intelligent enterprise robots and notes several immediate advantages that they can provide. Improved warehouse throughput with up to 70% picking cost reduction, increased speed, especially in the processing of millions of SKU numbers, permitting greater warehouse efficiency and faster order deliveries, maximum return on investment as the robot system will pay for itself through higher mission-critical performance. They have 5 focus verticals to capture their potential multi-billion-dollar opportunities that include retail, e-commerce, grocery, parcels, and third-party logistics. Some of their current anchor customers include Walmart, Target, FedEx, and TJX. We're only in mid-July, and the company has already contracted for 94% of its 2021 revenue forecast. Strong growth in the grocery and parcel verticals have pushed total orders up, and the company reported 114 million in new orders since the end of 2020. Covering the RAAC SPAC stock is Greg Palm from Craig-Hallum. He writes that Berkshire Grey has emerged as a leading robotics company that fully integrates hardware, software, and AI into something it calls intelligent enterprise robotics. This product portfolio offers customers a comprehensive solution that includes robotic picking, mobility, cloud-based monitoring, and analytics and service. As a result, we view Berkshire Grey as a key enabler that allows customers to better compete in this ever-changing environment. With labor trends worsening and e-commerce demand accelerating, warehouse automation is at an inflection point. We estimate that only 5% of warehouses are automated, creating a significant opportunity for companies like Berkshire Grey. Now, Greg is actually the only analyst that is currently covering the Berkshire Grey SPAC merger, and of course he does rate it as a buy. His price target comes in at $15 per share, which would be a 71% upside potential from current prices. So there are 2 stocks in the artificial intelligence industry, both positioned for some great growth potential in the future. Now, let me know in the comments down below how you feel. What do you think of these 2 companies? Were either on your radar before? What do you think of their growth potential? And what are your feelings around SPACs in general? I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock. They're just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end of today's video, make sure you smash that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and I'll see you back here next time.